It's time. We'd now like to start the Sony Group Corporation Consolidated Earnings Announcement Meeting. I am Okada from PR. I'll be serving as MC. I'd like to introduce the presenters. President, COO, and CFO, Hiroki Totoki. Senior Vice President in charge of Corporate Planning and Control, Lead of Group DEI, Support for Finance, Business, and Entertainment Area, Naomi Matsuoka. Senior Vice President in charge of Finance and IR, Sadahiko Hayakawa. Sony Financial Group, Inc., Senior Managing Director and CFO, Kazuhiro Yamada. These four will be making presentations about the results of the first quarter, fiscal 24, and forecast for the full year, and afterwards we'll have Q&A. Total session time expected to be about 70 minutes. Mr. Totoki, please.
First, I would like to briefly discuss the recent changes in the financial market environment. We are extremely concerned about the sudden fluctuations in exchange rates and possibility of economic downturn, particularly in the United States. The forecast we are presenting today does not incorporate any of the recent rapid market changes. I believe that you're interested in foreign exchange. The assumed rate is evaluated at the rate very similar to today's rate, and with that we evaluate our performance. However, we will closely monitor the impact on the real economy and our business going forward and aim to take any necessary action swiftly and provide an update if any significant changes occur. Now we will explain this content. Starting from this time, Mr. Yamada from Sony Financial Group will provide an explanation of the financial services segment in addition to Ms. Matsuoka and Mr. Hayakawa, and I will then give a summary at the end. Now, Hayakawa-san, please. Consolidated sales, including the financial services segment, for the quarter increased a significant 12% compared to the same quarter of the previous fiscal year to 2,567.4 billion yen. And operating income increased a significant 50.6 billion yen to 249.1 billion yen. Consolidated sales increased 2% year-on-year to 3,011.6 billion yen. Operating income increased 26.1 billion yen to 279.1 billion yen, and the net income increased 14.1 billion yen to 231.6 billion yen. The results by segment for this quarter are shown on this slide. Next, I will explain our consolidated result forecast for FY24. The consolidated sales forecast, excluding financial services, has been upwardly revised by 3% to 11,700 billion yen. The operating income forecast has been upwardly revised by 35 billion yen to 1,165 billion yen, and the net income forecast has been upwardly revised by 55 billion yen to 875 billion yen. Our operating cash flow forecast remains unchanged from the previous forecast at 1,400 billion yen. Consolidated sales are expected to increase 2% from the previous forecast to 12,610 billion yen. Operating income is expected to increase 35 billion yen to 1,310 billion yen, and net income is expected to increase 55 billion yen to 980 billion yen. The net income forecast is 9.4 billion yen, higher than the recorded in the previous the fiscal year. Operating income on both on a consolidated basis, including financial services, and the consolidated basis expected to be record highs. The full year forecast by segment is shown here. Now I will move on to the explanation of the overview of each business. The first is the G&NS segment. Although hardware sales decreased, FY24 Q1 sales increased a significant 12% year-on-year to 9 billion yen, primarily due to the impact of foreign exchange rates and increased first-party software sales. Operating income increased a significant 16 billion yen year-on-year to 65.2 billion yen, mainly due to the benefit of increased revenue from the first-party software and network services, despite increased costs, including expenses resulting from the restructuring we undertook on a global basis. For FY24, we are now forecasting sales to be 4,320 billion yen, an increase of 120 billion yen from the previous forecast, and operating income to be 320 billion yen, an increase of 10 billion yen. Despite not releasing any tentpole titles, user engagement during the quarter remained high, driven primarily by expanding PlayStation 5 installed base and contributions from the solid franchise software titles. The number of monthly active users of PlayStation was 116 million accounts, the highest number ever recorded for June, up 7% compared with the same month of the previous fiscal year, and total playtime also increased 8%. In terms of our software titles, Helldivers 2 is performing better than our May forecast, and PC version of Ghost of Tsushima and the Destiny 2 expansion content, The Final Shape, are also contributing to earnings. This month, we plan to launch our live service game Concord, followed in September by Astrobot and the PC version of our smash hit title God of War Ragnarok. As for the network services, US dollar-based sales increased 13% year-on-year, driven mainly by a steady shift to premium services and increase in IARPU, average revenue per user, resulting from price revisions in PS Plus. Under the new management structure, the platform business group is steadily maintaining and expanding the number of active users and user engagement as priority initiatives, and intends to work to further strengthen the PS platform and establish a stable earnings base. Additionally, the studio business group is strengthening its development schedule, the management, and optimizing development projects in order to consistently and continuously release hit titles. Next, the music segment. FY24 Q1 sales increased a significant 23% year-on-year to 442 billion yen, primarily due to the impact of foreign exchange rates, as well as increased live box office revenue and the streaming revenue in recorded music. Operating income increased 12.5 billion yen year-on-year to 85.9 billion yen, mainly due to the benefit of the increased sales and favorable impact of foreign exchange rate. A 6 billion yen remeasurement, the gain resulting from the consolidation of company previously accounted for using the equity method, was recorded during the Q1 of the previous fiscal year. On a US dollar basis, FY24 Q1 streaming revenue in the recorded music increased 5%, and music publishing increased 20% year-on-year, 19% and 36% respectively on a yen basis. For FY24, we expect sales to increase 50 billion yen from the previous forecast to 1,740 billion yen, and operating income to increase 15 billion yen to 330 billion yen.
Global market growth in calendar year 2023, it was 10% higher in recorded music and 11% higher in music publishing, both compared to the previous year. In addition to an increase in the number of paying subscribers for streaming services and market expansion in emerging markets, recent price revision by music distributors have led to market growth for the 9th consecutive year in recorded music and the 11th consecutive year in music publishing. In the medium term, the market is expected to continue to grow at a mid to high single-digit average annual growth rate, driven by increased ARPU, and further growth in emerging markets. From early on, Sony Music Entertainment has been strategically focusing on capturing the expansion of the indies market and building a robust ecosystem, as seen from the 100% consolidation of The Orchard in 2015 and the acquisition of AWOL in 2021. Through The Orchard's approximately 50 locations around the world, we are expanding our business in rapidly growing emerging markets by providing a wide range of services, such as digital music distribution and data analysis using the latest technology. By actively pursuing strategic investments in emerging markets, including the Brazilian label Som Livre and Rimas Entertainment, the label of Latin music superstar Bad Bunny, to which The Orchard has been providing services, we have established a strong presence in Latin America, India, Africa, and other markets around the world. As can be seen with the success of Sony Music Entertainment Japan, its artist YOASOBI in overseas markets, we have been able to create hits that transcend national and regional borders through The Orchard. Next is the pictures segment. FY24 Q1 sales increased 5% year-on-year to 337.3 billion yen due to the impact of foreign exchange rates, despite a decrease in US dollar-based sales, primarily resulting from a decrease in the number of television programs delivered and a decrease in the number of theatrical releases. Operating income decreased 4.7 billion yen year-on-year to 11.3 billion yen, primarily due to the impact of the decrease in US dollar-based sales. For FY24, we forecast sales to be 1,520 billion yen, an increase of 40 billion yen from the previous forecast, and operating income to be 125 billion yen, an increase of 5 billion yen. In the first half of the calendar year 2024, theatrical box office revenue in the U.S. remained at a level approximately 20% lower than the previous year, primarily due to the impact of the strikes. However, from June onwards, the release of tentpole films from major studios, including ours, has increased, and we expect box office revenue to gradually improve. During the quarter, the sequel to our popular franchise, Bad Boys Ride or Die, and the Garfield movie, which we distributed worldwide, have both been hits. It Ends With Us, a film adaptation of a best-selling novel, is scheduled to be released on August 9th. The trailer set a record of approximately 130 million views in the first 24 hours following its release, and we are hopeful that it will be an indicator of the success of our efforts to discover excellent original works and turn them into films. As for Crunchyroll, the number of paying subscribers exceeded 15 million in July. In order to capitalize on the rapid expansion of the anime market, we have signed a global distribution agreement with Amazon Prime Channels, and after launching in the US and the UK in October last year, we began distribution via Amazon in Brazil, France, India, and other countries since April this year. In addition to further expand opportunities for engagement with anime fans, we've announced our plan to expand our e-commerce site, Crunchyroll Store, which was previously only available in North America and Australia, to 34 European countries. On June 12th, Sony Pictures Entertainment completed its acquisition of Alamo Drafthouse Cinema. Alamo operates 41 theaters across the U.S. where customers can enjoy a movie while dining. The company is a leader in the dine-in cinema industry and ranks 7th in North America in terms of box office share. It has approximately 4 million enthusiastic loyalty members, over-indexing on younger demographics. By building upon Alamo's connections with this fan community, we look forward to creating synergies with our content IP, including not only movies but also games, music, and anime. We also look forward to opportunities for Alamo and Crunchyroll to collaborate. With this acquisition, SB established a new business division, Sony Pictures Experiences, and aims to further strengthen its efforts in the experiential live entertainment business. And next is the ET&S segment. Although television sales decreased, FY24 Q1 sales increased 5% year-on-year to 600.9 billion yen, mainly due to the impact of foreign exchange rates. Operating income increased 8.4 billion yen year-on-year to 64.1 billion yen, primarily due to the favorable impact of foreign exchange rates. For FY24, we forecast sales to be 2,420 billion yen, an increase of 50 billion yen from the previous forecast, and operating income to be 190 billion yen, unchanged from the previous forecast. With regard to operating income, despite the favorable impact of foreign exchange rates, we are maintaining our previous forecast by incorporating the risk of the worsening market environment and the impact of rising logistics costs. Looking at the market environment during the quarter, our key product categories in Japan, Europe, and North America trended according to our expectations, while in China, the television market contracted significantly, and the digital camera market, including solutions, grew significantly. As for the television business, we were able to achieve highly resilient operations during the quarter by focusing on inventory control and cost-cutting initiatives. We will aim to continue to do so, while also focusing on high-value-added products such as the new Bravia 9 series, which we believe will further enrich the cinema viewing experience at home. And as for the imaging business, which includes digital cameras, we intend to pay close attention to demand trends in China, where the market is growing rapidly, and aim to further expand profitability by further diversifying our creator audience, primarily through the launch of the new Vlog Cam product ZVE10 Mark II. In addition, by emphasizing inventory control across the segment, we were able to further reduce inventory at the end of the quarter compared to the same quarter of the previous fiscal year, which is also contributing greatly to the stabilization of profitability in the business segment. In preparation for possible future change in the business environment, we aim to focus on managing inventory and accounts receivable based on conservative demand forecasts and thoroughly control cash flows.
Next is the I&SS segment. Fiscal 24 Q1 sales increased significantly by 21% year-on-year to 353.5 billion yen, mainly due to the impact of foreign exchange rates and increased sales of image sensors for mobile devices. Operating income increased significantly by 23.9 billion yen year-on-year to 36.6 billion yen, mainly due to the favorable impact of foreign exchange rates and the increased sales. For fiscal 24, we expect sales to increase 10 billion yen from the previous forecast to 1 trillion yen, 850 billion yen. We expect operating income to increase 5 billion yen from the previous forecast to 275 billion yen, as the favorable impact of foreign exchange rates is partially offset by the impact of a significant decrease in demand for micro OLEDs used in AR and VR. The global smartphone product market during the quarter continued to show a gradual but steady recovery like in the previous quarter. In addition, the trend toward polarization of price ranges in the product market, particularly in China, continues. This has accelerated the expansion of the high-end smartphone market, which has led to further progress of the expansion of the size of the sensors we ship. As such, the market environment is progressing generally in line with our previous forecast. From the second quarter onwards, we expect the trend toward larger sensors for ultra-wide-angle and telephoto cameras to continue. We believe that this trend, together with improved sensor performance to improve camera video capabilities, will be medium-term growth drivers for the mobile sensor market. In terms of production, improvements in yields for mobile sensors are progressing as planned in May, and we aim to achieve a normal run rate during this fiscal year. Additionally, we will aim to make maximum use of existing production capacity and be selective in making new investments. Together with other development and operational efficiency measures, we intend to work to improve profitability, a key theme of this mid-range plan. Last is the financial services segment. Fiscal 24 Q1 financial services revenue decreased significantly by 34% year-on-year to 448.6 billion yen, primarily due to the impact of market fluctuations at Sony Life. Operating income decreased significantly by 24.5 billion yen year-on-year to 30 billion yen compared to the same quarter of the previous fiscal year, which benefited from the recording of a gain on the sale of bonds at Sony Life. Insurance service results at Sony Life, which are the base load of profitability for the business, continue their stable trend at 41.8 billion yen. Fiscal 24 forecast remains unchanged from the previous forecast, with financial services revenue of 910 billion yen and operating income of 145 billion. With regard to financial services revenue, gains from the separate accounts at Sony Life exceeded our May forecast due to the impact of market fluctuations. However, taking into account factors such as uncertainty about market fluctuations, we are maintaining our previous forecast. Now we will discuss the opportunities and challenges for growing our life insurance business. Sales of insurance products at Sony Life have grown significantly over the last 5 years. In terms of sales channels, the agency channel has grown significantly in addition to our mainstay Life Planner channel, and in terms of customers, our business with corporate customers has grown significantly in addition to our traditional strengths in individual customers. The new policy amount for the agency channel and with corporate customers in fiscal 23 grew 2.3 times and 3.7 times respectively compared to fiscal 2019. Due to this growth, Sony Life's share of new policy amount in fiscal 23 reached 16%, continuing to rank first in the industry for 2 consecutive years. Even though Japan's population is declining, we have continued to increase our sales of insurance products by expanding our share, and we believe that we have ample opportunities for growth going forward. On the other hand, we believe that there is an issue with how easily our business performance and financial soundness are affected by market fluctuation factors, particularly interest rates. Regarding new policies currently being sold, we have already reduced the sales ratio of so-called high capital load products such as whole life insurance, and we are also preparing to further enhance hedging against market fluctuation risks. Regarding our efforts to address financial issues, including existing contracts, we plan to present our progress to date and future initiatives at the second quarter earnings announcements. In the financial services segment, at the business segment meeting we held in May, we set adjusted net income of 120 billion yen as a key performance indicator for the fiscal year ending March 31, 2027. As a result, from this quarter, we have begun disclosing adjusted net income, the details of the adjustments, and other metrics. Finally, I would like to give you a general summary. As I mentioned a bit at the beginning, looking where there is uncertainty or instability of the market, making it more difficult to forecast the future performance. But we have this fifth MRP, and we have a strategy to enhance our resilience to changes in the environment. And we recognize that we've entered in the period in which the real value of that strategy is being called into question. So in terms of our business portfolio, our entertainment area is the biggest. Relatively speaking, impact of macroeconomics is not so large, it's not so direct, but we have to think about various risks and carefully conduct our business. So no change in that thinking. The key performance indicators for the entire group laid out in our mid-range plan include a 10% or higher growth rate of operating income and a 10% or higher 3-year cumulative operating income margin on a consolidated basis, excluding financial services. Our Q1 results represent steady progress toward that goal. That we can say. We plan to make every effort to maintain these targets and our goal of strengthening shareholder returns, and we intend to regularly provide updates on our progress. That's all from my presentation. So those are the presentations by Todoki, Matsuoka, Hayakawa, and Yamada. From 4:27, we'll have a Q&A session with the media. From around 6:50, we'll have Q&A with investors and analysts. We'll take approximately 20 minutes for each of those Q&A sessions. Those who have pre-registered to ask questions, please connect to the phone number provided. And please read the material provided for how to ask questions. Now, please wait until we are ready to resume.
Thank you very much for waiting. So now we'd like to answer the questions from media. Those who answer the questions are the same as the speakers that made a presentation previously. So now we would like to begin question and answer session. Please limit your question to 2. And those with questions, please press the asterisk and then press number 1. So the first question is from Toyo, the Securities, Umegaki-san. Umegaki-san, please. So Umegaki from Toyo Keizai, thank you. And I have a question about GNNS. For you conducted the restructuring, the exercise, and for studio, the business group, for you, for instance, management of the development project, etc., for over the last 3 months, and going forward, now is in August within this fiscal year. What kind of the structural, the restructuring you are going to conduct? What is your plan for that? Thank you for your question. So at this moment, Banji restructuring has been already announced. And at this moment, as you correctly pointed out, for this restructuring, the purpose is cost, the structure, and portfolio optimization. Those are the purposes. And simultaneously, we have to enhance the efficiency of the business. So back office functions should be integrated with the studio of SIE. So the Banji itself, as it is considered, Destiny 2, and new live service Marathon, title Marathon, the headcounts and also resources will be concentrated there. So high quality and wonderful games, game experiences should be developed. So we would like to concentrate resources there. And functions other than that, and other types of development, the title development, that will be transferred to the PlayStation, the PS, the studio group. And so there will be some reallocation of the resources. So in any case, the organizational, the structure will be changed. And so we would like to optimize overall studio structure. That's all. Thank you.
Next question. Nikkei. Sato-san, please. This is Sato from Nikkei. I have 2 questions. Thank you. First, about the IT strategy in general. Paramount's acquisition. Why do you not submit another proposal? And the entertainment IT sector, what sort of a size of investment are you planning for? And of the operating income, how much of the proportion will the IP hold? What is your final vision? And the second is about the global economy. well, there's a slowdown, and also we see a division of the U.S. and China. How do you see this? And what other measures do you have in place to address this? And what are your expectations towards the next president or administration of the U.S., and what concern do you have? Well, about the IP strategy, well, in general, I believe that your question was asking about the general strategy. But the reason why I did not propose again a proposal to acquire Paramount, well, we believe that at this point in time, Paramount acquisition, well, it does not fit well with our strategy. That is a judgment that we have handed down. And the proportion of IP earnings within our operating income is difficult. But the entertainment business, in some way or other, IP is related. And so IP is at the core, based on which we carry out our business and generate revenue. And therefore, the proportion or the targeted proportion of IP earnings is difficult for me to say. So entertainment on the whole, we would like to focus on strengthening the IP. This remains unchanged. But do we have a target? Well, we, as much as possible, want to grow the business, and therefore on a consolidated basis with our MRP, with CAGR, the operating income at 10%, and also the profit margin 10%. We have this target, so we would like to put in different measures to achieve these goals. And about the global economy. Well, currently, the global economy itself is driven by the U.S., especially the consumption in the United States. And in our business, what we must focus on is the U.S. economy and consumption in the United States. Currently, we see that there are some signals indicating an economic slowdown. As a macroeconomics numbers figures, we do see that signal. But how deep this will be, how long it will continue, is very difficult for us to foresee. But there are such signals, and therefore we must watch closely the developments. And about the expectations towards the next U.S. administration. Well, Sony, at any rate, want to respect the choice of the American people, and what changes would result as a result of the election is something that we will keep an eye on. That is all. Thank you.
Next question. Nikkei BP, Iwato-san, please. Iwato from Nikkei Business. 2 questions. About Crunchyroll. So surpassed 15 million, you said. So I think that it is a good news. That kind of momentum, do you think will continue for the time being? So what's the current situation and what's the future growth prospect? And in the presentation, you talked about enhancing resilience. So that's the strategy of the MRP, and you said that the true value of that is being put into question. So with the higher uncertainty, in trying to enhance resilience, what will be the most important factor, you think? Thank you for the questions. First, about Crunchyroll, current situation, and our expectations. Matsuoka will respond to that question. Matsuoka-san, please. Thank you. For Crunchyroll, earlier we talked about that. So we exceeded 15 million in July. And so we have great works like Kimetsu no Yaiba, Kaiju Hachigo, Boku no Hero. All of these works are contributing. And as was mentioned, in the we are using Amazon Prime and platforms, so we have the partnerships with them that's contributing to the increased subscribers. And also we're distributing through theaters, and that is also going well. So anime creators in Japan, we have strong partnerships with them, and capitalizing on that, we are expanding our contents. In terms of price, we are providing at an attractive price level, very valuable service, and we have established a very advantageous position. And overseas, we are trying to cultivate a great IP, and we have co-production with Japanese animators and creators. And so in Europe, Latin America, India, Southeast Asia, so globally expanding and working on multiple languages, we'll focus on that. And so that's one initiative. And also further expansion of the partnerships that I mentioned earlier that will be harnessed to try to increase the number of subscribers. To respond to the second question, how to strengthen the resilience. So uncertainty is rising. What's the most important to enhance resilience was the question. In the short term, financially, the inventory control, cash flow control, those things, what we can do with finance, we certainly will do. And I personally, what I think is most essentially important is diversity of people. We have diverse operations, and that's one reason we need diverse people. But with diverse people, you have diverse ideas being generated. And we will not be focusing on just one idea. We will have the power to generate new ideas, and we'll be able to analyze from various angles. So we can have that kind of synergy effect. It's difficult, of course, manage diversity, but I personally would like to pursue the diversity of our people. That's all.
So we would like to move on to the next question. Tanaka-san from Asahi Shimbun, please. Tanaka-san, can you hear me? Can you hear me? This is Tanaka speaking from Asahi Shimbun. Can you hear me? Yes, we can hear you. So thank you for the opportunity. This is Tanaka from Asahi Shimbun. In connection to the previous question regarding Paramount, I have additional question. Up to now, you made proposal about acquisition, and you did not make it very clear even then. And if there is anything that you can disclose, what was your motivation or intention to start your move on acquisition? And you also said that you would not repropose because it is not well fitted to your strategy. So can you elaborate on that, please? As a Sony's strategy, what is a place, what is a point which is unfitted to your this acquisition case? For each individual the project, it's very difficult for me to answer the question. However, as I have mentioned so far, on our part, high quality IP, and we have been focusing on the asset, and that particular asset at the appropriate price, and that can be acquired. And if that kind of deal structure is established, we would like to become very serious about acquiring that kind of the target company. But the company, Paramount, the corporation is quite large in size. And for instance, if we have to acquire the entire the organization, it would be quite risky because our capital allocation itself, it may not be well fitted to our capital allocation strategy. That is a primary reason. Thank you.
Next question, please. NHK, Nishigata-san, please. Nishigata from NHK. 2 questions. First, about the Paramount acquisition. If you were able to submit another proposal, if you had thought that you could strike a deal at an appropriate price, would you have done so? And the second is about the CMOS sensor. Well, EVs are being produced internally in China these days. And are there any concerns that you have in terms of the sales of your CMOS sensors? Because EVs are mainly being produced in China. Well, in regards to your first question, I think I've already answered that. So I really don't have anything to add to what I've already responded. I apologize. And secondly, about your second question, about the electric vehicles. And the fact that they are trying to produce domestically electric vehicles. Well, the sensors for automobiles, I think you're talking about. But we, including the Chinese manufacturers, are not just doing business in China, but instead we are supplying to global OEMs the sensors for automobiles. And therefore, in China also, we have competitors, and we want to make sure that we do not lose out in terms of our technology. But sensors for automobiles and sensors for smartphones, they're different. And the market is still small for automotive sensors. How much this will grow is something that we have to observe carefully. That is all. Thank you. Thank you.
We're starting to run out of time, so we'll take one more question. So please make it just one question because of time constraints. Are there no more questions? Seeing none, we will end this Q&A session for the media. Investor Analyst QA session will start at 4:48. Thank you for waiting. I'd like to start the Investor Analyst QA session. I'm with IR Group, Kondo. I'll be serving as moderator. And as was the case for the media session, these 4 will be responding to your questions. In terms of how to operate your phone in asking questions, please refer to the information previously provided. Please limit your questions to maximum 2 per person. I'd like to start the Q&A. Those who have a question, please hit asterisk, then number 1 on your phone. So, first question. BofA Securities, Hirakawa-san, please. Thank you. Hirakawa of BofA Securities. About games and music, I have a question. So, about games, monthly active user, 7% Y-on-Y growth. That was a very strong growth. And can you talk about the background in a little more detail? Because there was an update of large update that last year, and that led to increased monthly active users. And are there any other factors? I want to ask the background. That's the first question. And should I continue the questions? Please. About the music, earlier you talked about music streaming sales, midterm growth mid to higher single digits was your forecast. And until Q3 last year was double digit without the Forex impact. So that was the growth you had. Now 6% in Q1 seems to be slowing down a bit. And so do you think that you've come down to the mid-term growth trajectory, or was there one-time factor for Q1 and it's slower than this year's overall pace? Because at the beginning of the year, you said for this year, subscription price rise was expected. So I was expecting a little bit higher. So those questions, please. Thank you for the questions. So let's take the first game network service question. I'll respond to that. The music question, Matsuoka will respond. So for games, MAU year-on-year, 7% growth. Very good number is how we see it. And of course, the 5 install base is accumulating, PS5. And we have the franchise software contribution. So third-party free to play are also strong. I won't go into the individual title names, but those tailwinds have had an effect. I think that's one of the factors. Matsuoka-san, please. So, streaming service. So if you look at that, the overall growth is in line with the previous trends. And it may seem as if growth is slowing. The factors behind that are, for Q1, over a year ago, we raised the prices for multiple DSP, and so the impact of that is now diminished. And we have the ad streaming service revenue of that is declining a bit. And however, in a constant currency basis, well, earlier we said 5% in dollar terms, but if you look at that in constant terms, it's higher, 6%, in the 6% range, according to our calculations. So overall streaming growth rate is in line with our projections.
Thank you. Next question is from SMBC Nikko, Katsura-san, please. Can you hear me? My name is Katsura from SMBC Nikko. So my question pertains to INSS Semiconductor and also regarding the financial services. And regarding INSS, so mostly supply to major the companies in North America. And if you have any plus and minus over the last 3 months, please share that with us. Now, at this moment, you increase the production in your supplementary document, and the production capacity compared to our original the projection seems to be stronger and bigger. So, what is your concept on that? And the mid to long term, there is a risk of your competitors entering the market. I think that has been discussed in the market. So from mid to long term, what is your view of your position in the market? This is the first question about semiconductor. And regarding my second question on the operating income of the second quarter, I think the progress rate is the 21% and operating income. And of course, there are the upside and downside risk under the current market the condition. What is your view about that? Thank you for your question. Regarding INSS, I would like to answer the question. And about financial services, and I would like to ask Yamada-san to answer the question. And regarding INSS, regarding individual the customers, setting this aside, we increase the production that you mentioned. The reason is for the high-end the products. We have increased the shipping for that. For that reason, we have increased the production. And the risk of other companies entering the market, it has not started now under the very the severe competitive environment. We always have competitors, and we constantly analyze our competitors, and we try to overcome our weakness so that we can be advantageous in technology position. And as for the long term, it's very difficult to make comments. But during our MLP period, the risk from our competitors joining the market, if there is any concrete examples, I believe that the probability of this risk is quite small. That's my answer. And so about financial services, Yamada-san, please. Thank you for your question. The first quarter, the progress rate, the 25%, that is a little bit the low. There are two reasons. The first is at Sony Life. There is a larger number of increased surrender, particularly dollar-based. The rate, interest rate has getting higher, and there is a yen depreciation. And for that reason, that leads to surrender of the products, policies. And about the non-life, for instance, natural disaster that has impacted, and for that reason, and of course, we try to overcome that in midterm, and how we should look at this ups and downs. And for during the first quarter, our sales performance has been quite good, and that is considered to be upside potential. But for the life insurance, the sales performance, even that is good, does not lead to profitability. Depending upon the offering of the services, the effects have been penetrated gradually. And for the sales activities, there is the increase of surrender. And of course, that is mainly due to the market condition. But life planners, that we have to provide good information to the customers so that they are able to make good judgment. I think that will give upside potential. And also for the market downside, the market, there is a change in conditions, but compared to the end of June, the interest rate falls, and also for the stock market, there is some fall, and foreign exchange, we see the yen appreciation. So for the interest rate, we are quite positive about that. And foreign exchange and stock, the price, we are negative. And so this market condition may be reflected in upside and downside. So we have to pay constant attention to the market condition so that we can always constantly control the profitability. Thank you.
And next, from Mizuho Securities, Nakane-san, please. Thank you very much. This is Nakane from Mizuho Securities. I also have two questions. Well, it's a related question, but first is the investor return and buyback, and also the next is balance sheet. From May, looking at your buybacks, in 3 months, it's closer to 100 billion. And on average, the price is more than 14,000 yen. So irrelevant to the share price, you are continuing with the buyback. And it seems to be that there's strategic investment, so it's best to invest in Sony, and that is the reason why you're investing in Sony. And so I think that was your stance, but have you changed your policy? So that is one thing. And also, the second is excluding financial service balance sheet. Well, I think we had less than 30% capital ratio, but now it's more than 40%. And when it was 30%, you said that more than 40% would be your target, more or less, I believe. But now you currently exceed 50%, and the leverage is not working. So excluding financial service, the shareholders' equity ratio, what is the minimum that you have in mind? So please tell me about that. So these are my two questions. Thank you very much. There are two questions. So Hayakawa-san will first respond. Yes, thank you for the question. About your first question, yes, as you said, we as a company have been buying back our shares, and it has been part of our strategic investment. Looking at the financial situation, our business performance, our share prices have been trying to do it with agility. And so this has not changed. But from this fiscal year, the fifth MRP, we want to strengthen our shareholder return. And therefore, we want to increase the total payout ratio to 40%. And therefore, I think we are strengthening our shareholder return. And this has been incorporated. And also, currently, they're looking at the share prices, we are buying. So please understand that that is the current case. That's the answer to your first question. The second, as you say, as of the end of June, looking at it's a 50.4% shareholder equity ratio, and as of the and we think that losing for the shareholder equity ratio, we have not changed our thinking, and we want to have a healthy balance sheet. And looking at the investment opportunity and market changes, we want to have a competitive finance in place, and we want to try to achieve a 40% more, excluding financial service. And from that point of view, currently because of the accumulation of profit, our shareholder equity ratio has increased, but we think that with the buybacks that was explained, we can try to improve the capital efficiency on a balance sheet. That is all. Thank you.
Thank you very much. Next, JP Morgan Securities, Ayada-san, please. Thank you. Ayada from JP Morgan. I also have two questions about games and INSS. First, about games. Add-on sales growing substantially in dollar basis, about 20% growth in revenue, it seems. But the breakdown, I want to know if you can make some supplemental comments about that. What's included here? First add-on and third-party add-on. First being less share and large titles that were strong until last year, and others within third-party. I think you can have those three categorization. So can you show the breakdown? And 1Q add-on structure, how is that going to be reflected in the Q2 onwards? And the second question is about the INSS inventory. As of from end of March, has increased about 100 billion, and so I think there is because of seasonal factors, work in progress. But if you look at the final inventory, what's the current level? Is it high, low? I think the unit price is going up for chips, and that's why the value is going up. But in terms of volume terms, finished product inventory, is it sufficient? And based on that, Q2 onwards, what will be the utilization? What's your view on that, please? Thank you. Like to answer both questions. First, game and network service add-on sales growing. You point out that that's correct. Most from third party. first party a little bit, but mostly it's for third party. I think I can say it that way. And also, for individual titles, it's difficult to comment, but for several, well, it's divided into several titles, and the biggest title that you can imagine, that is growing, and that is true. But the others as well, there are various titles growing steadily. I think I can put it that way. Also, INSS basically, as you point out, there's an impact of seasonality. That is the big impact. And the finished inventory in terms of volume, is it sufficient, was your question. Looking at the sales size, it's at a rational level, reasonable level. Q2 onwards, what will be our utilization? Mobile image sensors, we're at full capacity almost. That's our view. Thank you.
The time is running short, so the next question will be the last question. So please limit your question to one question. Yasui-san from UBS Securities, please. Thank you. My question is about economic the condition that Totoki-san already explained, that the foreign exchange and also U.S. are the major impact factors. And for those two factors, well, I believe that depending upon the categories, I think there is a change in the impact. So what are the categories which are affected? And for instance, U.S. economy and the foreign exchange, you put more emphasis. And in your business model, in a realistic way, I think, are there any things that you're worried about? If those things happen, you're worried about that. If you are, how do you define and interpret the future of economic the concerns this time? Thank you very much. So regarding foreign exchange, the sensitivity issue should be addressed. So Hayakawa-san will answer that question. Thank you for your question. And for our forecast for the financial results, by presenting that, in the immediate past, there was the rapid foreign exchange, the fluctuation. But so we have updated with yen, the depreciation for both the euro and the US dollar. And ISS is most affected in terms of sensitivity. And so the immediate forecast, we have to update for each category. And as for the foreign exchange sensitivity for music and pictures, the accounting translation is included. For $1, 50 yen. The sensitivity exists, and so including the accounting, the translation, and for euros 65 yen. So by those numbers, you can see the impact. But that is the sensitivity for the next 1 year, for the 1 year, and so there is the foreign exchange hedge, the hedge effect, and that will be offset to a certain extent. And on the 5th, there was yen appreciation up to 140 yen. But currently, the 146 or 147 yen, still volatility is high. But we would like to check the factors for fluctuation. And we would like to address this issue properly and manage that. And if it is needed for electronics, the product price revision has been carried out. So we will be very flexible in even including transferring that impact into price. And so in overall picture, after August, if there is a 10 yen, the yen depreciation in dollar and euro will move in parallel with that. In that assumption, in terms of sensitivity, on a consolidated basis, the 70 to 80 billion yen worsening is anticipated. But that is just a matter of simulation. And before foreign exchange moves that way, of course, we do have the advance the countermeasures taken, and we have to also make some adjustment, and also cost will be the cut in accordance with that, so may not directly impact our financial results. And at this moment, overall sales and compared to our business scale, on a consolidated basis, the foreign exchange impact is not that great within a certain range. So we'd like to continue to control this and manage this solidly. And from the perspective business model, in macro picture, the risks which may impact our business significantly, well, it's very difficult to think about them, but geopolitical risk is certainly the big risk. And when it appears in the macro picture, that may give a major impact. For image sensor, U.S.-China relations have significantly impacted our business in the past. We do experience this. So regarding geopolitical risk, we have to be always very cautious about it.
Thank you very much. It's time for us to end, and we'd like to thank you for taking part in our Q1 earnings announcement meeting. Thank you.